everyone. Good morning, good evening, good afternoon. We would like to welcome you to the first webinar of IAMTN of 2021. Last year, we had a series of webinars where we were covering especially the impact of COVID-19 on migrants and remittances. This year, we want to continue with that, but to go a bit further. So for this reason, we have 3 panelists.
Okay, did we lose Veronica?
It seems so.
I think we have.
Right.
Elizabeth is there. Hi, Elizabeth.
Hi, how are you?
Hi.
Oh, great.
So we are all ready to start. Mohit, I pass it to you.
Okay, I think you cut out in the middle, but that's okay. I can take over. But great. So, welcome everyone to this conference. Great to have you. Apologies for the sort of slight. You think we would have mastered webinars by now after having been doing it for a year, but technology is still keeps us on our toes. But great to have you here. I was really hoping that by now we would be doing this in person, but you know we struggle to still sort of fight with COVID, but I do hope that will change soon. So great welcome to you. Great welcome to the panelists. I think Veronica cut out just as she was introducing them. So let me do that. We've got Anca from cLabs, lead strategic partnerships, policy and advocacy at cLabs. We've got Pat, who's VP of global accounts management of Ripple, and Elizabeth, CEO and founder of AZA, formerly known as BitPesa, as a number of people may know. So great, guys. Welcome and thank you so much for participating. Just before we get into the crux of it, it would be great to just run a quick poll, Veronica. I know a lot of the people are still dialing in, but just to get a sense from where they're connecting from and which organization. So maybe if you could just launch that. And guys, if you could pick, I think you'll only be allowed to pick one answer each. So if you could do that, that'd be great. We'll just give it a minute. Looks like a lot of European participation. Yeah, Middle East, my apologies to our colleagues. I know it's Ramadan, so it's tough with the fasting. So we normally do have a number of people join from there. Okay, so it gives us a sense of pretty much Africa, Europe, and so pretty spread out, which is great. And just maybe the next one, Veronica, to get a sense of the organization as well would be great. Yeah, not surprisingly, a lot of remittance service providers, which makes sense. Okay, great. Thank you for that. Gives us a sense. So, great. We'll start the webinar itself. So, if I could request the panelists, maybe if they could take 5 minutes to organization. We're all familiar with your great organizations, but it's always good to hear it from the horse's mouth. So, Pat, I'm going to have to give you last because we've got 2 ladies. So I'll go to the ladies first, if that's okay. Anca, maybe you can kick us off and then we'll go on to Elizabeth and then Pat.
Absolutely, happy to. And we could also, I think this also works alphabetically quite well in mine and Elizabeth's favor and Pat's disfavor. Hi, everyone. Thank you so much for joining. I'm Anca, as Mohit mentioned. I lead strategic partnership policy and advocacy for cLabs, which is a financial software company that has incubated and launched the mainnet of celo about a year ago. Celo is an open blockchain platform aiming to make financial tools accessible to anyone with mobile phone, inspired by quite extensive research that we have done in emerging markets and developing countries, ranging from the Philippines to Tanzania, Kenya, off to Sierra Leone, Liberia, and then Colombia, Argentina, Mexico, just a few. Celo has built a mobile-first blockchain platform alongside a range of financial tools really accessible to anyone with a phone. On the platform, value can be transferred faster and cheaper than traditional bank wires using globally accessible technology. Because digital currencies launched on the Celo platform are completely programmable, a wide array of financial services can be created without too much costly intermediaries. The network itself features a stability protocol, which is capable of hosting a ecology of stable value currencies, such as the Celo dollar, as well as the recently launched Celo euro, regional and community currencies, commodity-based stable coins, as well as central bank digital currencies. In addition to that, the cLabs team has launched at the beginning of this year the Valora wallet, which really aims to make sending digital currencies as easy as sending a text message. And anyone who's been familiar with mobile money, really the experience is extremely similar by being able to map the phone number to the blockchain public address. Celo is completely open source, so developers can collaborate to build financial applications and services to empower themselves and their communities. Applications that have been built so far range from easier cash transfer programs to peer-to-peer lending, remittances, digital assets, wallets. I think one thing that I'd love to mention is Celo's Alliance for Prosperity, which is a mission-aligned network of organizations fostering social impact and financial inclusion through the use of blockchain technology. Through these efforts, Alliance members include leading technology providers, nonprofits, mobile wallets, payment processors, global investment firms, and only the most recent member was announced 2 weeks ago, Deutsche Telekom, which we're really proud to welcome to the Alliance.
Great. Thank you, Anca, for that. If Elizabeth, I could request you, please.
Sure, and thanks so much for having me here. So I'm Elizabeth Rossiello. I founded the company BitPesa in Kenya in 2013, but we've since grown the company, which then was the first market maker for digital currencies in Africa and the first ever globally to make a market between mobile money and digital currency. We've now grown it into Asa Finance. We're a 250-person company. We'll transact almost $2.5 billion this year. We have offices and licenses from Nigeria, Uganda, Senegal, London, Spain, and we just announced in Bloomberg on Wednesday the acquisition of Exchange for Free, which is the largest provider of remittance services in South Africa. So in the last 8 years, we've grown quite a lot, and we like to describe ourselves as enterprise frontier FX. And, you know, we have been everywhere on the map in the last 8 years, working very closely with the last mile. So the mobile money, the bank payout, the card, the cash, every possible aggregator, telecom, etc. We know 15 different markets on the continent very intimately. We have subsidiaries and teams in those markets. And then we have our customers, which are 26 of the largest remittance companies globally, some of the largest Fortune 50 companies, FMCG companies, and a lot of the larger African brands you might know, from Dangote to Royal Salt, etc. This kind of ShopRite, Jumia. And then we have, of course, a lot of the fintechs and banks as customers. And what do we do is that we're really providing all of the services in the vertical that's needed to make these transactions go. In the crypto world, we used to call it the on-ramp, off-ramp, which is sadly something that's often forgotten. We launch a lot of coins, we have a lot of ideas, we have a lot of layers, and then it comes down to, well, how do we make this accessible to a market? Well, you need a regulation, you need compliance, you need liquidity, which is so important, market making, and really everything else that goes on that vertical. And we provide that for our customers in almost an outsourced back office way. So we work with every kind of company that needs FX, and we consider really digital currency as just another currency pair. And we've been crypto native since 2013. And for us, we've really seen every kind of bull and bear market. And, you know, often the liquidity is there and the speed and the pricing works, and sometimes it's not. And we really pride ourselves on making these African currency pairs So if you're a remittance company or a provider in Europe and you want access to the African markets, we'll not only sell you the FX, and we're the market maker, so it's off our own P&L. We're not buying from the high street and reselling. We'll deliver it, we'll settle it, we'll do compliance, and we'll push it out via our own API into every corner of the continent, and vice versa, collections coming in and out. And there are a lot of fintechs that might do card processing or wallets, but then they turn to us for the FX, the settlement, the compliance. So really we're that nerdy hidden middle layer that makes the clocks tick and the wheels turn.
Great. No, very interesting. Thank you, Elizabeth. Pat, over to you, please.
Thank you. Well, delighted to be joining Anca and Elizabeth on the panel today. So I'm with Ripple. Ripple is a payment company based out of San Francisco that started in 2012. We are now actually represented across the globe as we've really localized. So we've got offices in New York, London, Dubai, Singapore, Sydney, Sao Paulo. So hopefully most of the regions represented here in the poll. We've grown to over 500 associates now. And, you know, our mission in life is really to bring the internet of value. And so if you think about kind of the transformation that has occurred globally, you could see what occurred with kind of shipping back in the mid 1900s, and things like taking containers and intermodal and being able to ship a t-shirt from Southeast Asia to North America for pennies occurs today. And then when the internet came around at the turn of the century, if you were around then, what used to be expensive postal that took days to do through letter, and you know, the evolution of being able to do things real time through email, you know, happened with communication. So the way you can do transport communication, we really believe that now with the technologies available through blockchain and the investment in fintech today, the same can hold true with value. And we think that's important because it allows for financial inclusion in a way that's never been seen before. It's been talked about, but really as it relates to a lot of the things Elizabeth talked about, you know, in terms of providing that nerdy middle layer, you know, it also allows folks to get access in a way that has never been provided before. And so, you know, we have what we call RippleNet, which is both a messaging and settlement infrastructure. So it allows kind of bi-directional messaging across what is a, you know, private blockchain that we've created off of our XRP ledger, and it allows for kind of communication and settlement to occur so that transactions can happen. And what's important around that is really threefold. One, the communication and the transparency that occurs allows for much enhanced straight-through processing. Two, the regulatory and compliance out of that becomes known. And thirdly, the cost, particularly as it relates to the liquidity aspect, becomes very important. We do fiat, but we also inherent within our network is the ability to trade also cryptocurrency. Our native cryptocurrency is XRP, which was built specifically for payments. So the energy required and the speed in which it is done is, you know, 5 seconds or less, and was really built to you know, consume very little energy around that. And so with a product we called on-demand liquidity, we're able to, you know, eliminate, you know, that precious capital that resides out there. You know, estimate of kind of $10 trillion that sits around the globe in pre-funding. And we look to extend that with the value of cryptocurrencies, also to extend that to include lines of credit rather, and even free up more capital so that folks like ASA can continue to scale and scale very efficiently.
Great, thank you, Pat. It's great. So we have the entire spectrum covered, really, with sort of direct-to-consumer, B2B2C, and also the sort of protocol, the rails to develop for other companies to develop their proposition on. So, so let me start with the first question. When we look at the sort of the role of crypto in cross-border remittances or cross-border payments generally, what is the problem that it is really trying to solve? Or I guess, what is the need that is being addressed here? Is it more, Pat, as you just touched on, is it more liquidity management from a business perspective? Is it more a consumer proposition? Elizabeth, you touched on that as being the first sort of market maker and so on. And if I'm a CEO of a remittance company or a payment company, how should I be looking at this as I think through introducing cryptos in the middle of my payment proposition? Elizabeth, maybe you can kick us off.
Yeah, sure. And I just want to be clear, we're not currently using Ripple, and no offense to Ripple, but what we really see is that the industry is consolidating, and it's important to get rid of any middle layers that are absolutely not essential. So when I speak with a CEO and usually the head of treasury, I ask, where are you sending the money from? Where does it need to go? How do you purchase your FX, and how do you settle it? Where does it need to settle? These are the essential questions. And if the answer is actually, it's very easy for me to give you the funds, like I can give you $1 million in Europe very easily, but I'm struggling to pay out into Ghana. That's a different question than if they can't even give me the funds because the funds are coming from Senegal and they need to go over to Uganda. So the first question is, where are the funds coming from? Where do they need to go? Then we look at what's available in those markets. Is it easy to accept payment in Europe? Pretty much, honestly. There's some friction, but you don't really need to use a digital currency to accept payment in some of those markets. There are other benefits, but for me and for most of my pairs, let's be honest, and I'm a huge Bitcoin maximalist. I get paid in Bitcoin, but it's not needed really there. But when you pay out on the other side, sometimes there's some friction in accepting payouts, and sometimes it's coming back in. And the other thing we have to say is that if I'm going to pay out in a digital currency, does the receiver want it? No offense to everybody and all the coins that are out there, but often it's kind of forcing somebody to accept something that they would rather not have. They would rather have their local currency. Now, we are getting to the place in some markets where actually they want crypto. They want digital currencies. They don't want their local currency anymore. But it is a question we need to ask. What is the currency that they want? Nigerian government just put in a regulation, as everybody here, I'm looking at the remittance service providers in Nigeria knows, which said you are no longer allowed to give Nigerian naira to Nigerians. So they're telling the Nigerian market which currency they have to accept, and they're forcing them to use the US dollar. Let's not get into that. But the first question is, what does the receiver want? How can the sender pay? And what is the liquidity and availability and speed therein? Now, that's number one. Number two is there a way to optimize this by using a digital currency layer, a stable coin? Is it easier and quicker for someone to pay me with USDC? And I will say that some of our remittance clients do find it's easier to pay me in USDC or pay me in Bitcoin. I can receive that almost instantly. And then, the settlement for receiving is done. Now we have to worry about payout. And I will say almost never actually does the receiver want the digital currency. They want the local currency. So what we really do is we really see a lot of people saying that the sending or the accepting of funds can often be, I'd say 30% of the time for us, can be faster with digital currency payment. But the payout, the receivers and the small value remittances are really not interested. Now that's, I believe, likely to change in the next 5 to 10 years. We still see cash as king, even though it makes no sense to me. We see mobile money in some markets, cash in some markets, and honestly, bank payouts are still quite acceptable in a lot of the larger markets like South Africa and Nigeria. We see small value remittances still dominated by bank payouts in some of these markets. So before we force something on the market, let's ask, what do they want to receive it in, and where is the efficiency? Now, personally, when we work with other fintechs and we work with other banks and digitally native companies, when we launch a product where settlement happens via digital currency, it's so much easier. You don't have to go through this huge, involving 3 or 4 banks and all the processes and, putting it into SAP. The systems can align very quickly and you can launch a product very easily. And an example I like to give is when Bitbond and I originally had a product, and with Aza and Bitbond, we launched a way for merchants on Jumia to accept funds and to repay funds. And the whole thing was launched in less than a month. Now, part of that is startup agile culture, and part of that is, being a digitally native startup that's thinking in those terms of open source and aligned and coming together. So I think there's a couple of questions we need to ask. And honestly, I've been in this industry a long time. We sometimes skip forward and we don't ask those questions. And, in good product and in good business, and we would never skip that. So the first question is it really necessary?
Yeah, no, and I think that is really spot on, because, you touched on this with the sort of on-off ramps, right? So if you look at it from a consumer perspective today as well, which is great, I've got this cryptocurrency that can move instantly, but what do I really do with it? So, I mean, Anca, what's your perspective on the lay of the land right now?
I have to disagree a little bit with Elizabeth, because our research has found that especially, and not only in times of COVID, but definitely in places with high inflation, people do prefer digital currencies over local fiat. And I think it is fair that one has to make sure that the ecosystem for cash in, cash out, and usage is there to be able to actually do something with the currency. But there is, I think there's two angles. Like you mentioned, one is for the businesses who need to transfer funds. And they're, like Pat knows very well, Elizabeth knows as well, transferring funds in digital currency from cross-border is so much easier, and not having to deal with SWIFT and a bunch, going, like Elizabeth said, through a number of banks to be able to get funds. You are able to mitigate some of the impact of bank de-risking, who particularly impacts folks in vulnerable communities and countries that could really benefit from easier access to finance. And then you do have the end user. And here we talk less about, the big companies that are in the remittance business, and more about even peer-to-peer remittances. And for me, the role that digital currencies can play here, especially the ease of use of digital currencies, and this is one of the big value propositions that Thelen brings, is the mobile-first approach, where you can do that with a phone number. So if I know your phone number, Mohit, I could send you money right now in digital currency, whether it's stable coin pegged to the dollar or the euro or others. That actually has the benefit of potentially bringing into the formal market a lot of flows of remittances that are still informal, right? They're still very risky. They're still very time consuming. People still pay very high fees to have funds hand delivered from, France to Senegal or otherwise. And that to me is the end user benefit of this. I do think there are a lot of benefits for the institutional side, both in terms of liquidity management, of honestly just visibility of transaction. And I think we don't talk enough about the visibility that a financial regulator can have of the flow of transactions on a public chain, and how that can really meaningfully impact the cost of compliance. But from an end user perspective, I think there's just tremendous advantages, and we do see a lot of demand for hard currency stablecoins in those markets.
Okay. And Pat, you have the ODL product, as you touched on, on-demand liquidity. So how does Ripple view the current landscape, and what is it that Ripple is really trying to solve in your view? Is it the needs of the business? Is it the needs of the consumer, or both?
I think it's both. Really, having a use case and developing the utility is, I think, fundamental. Bitcoin, if you're bullish on Bitcoin, it is a store of value. It is not, created to have low-cost transactions. And the pain point that Ripple, endeavored on, 4 or 5 years ago was cross-border. And that is because there is inherent friction. Certainly, some of the larger currencies, there's less friction. But as you go kind of down the tail, it becomes more and more difficult. And, funny, we've heard our clients say, you can kind of do streaming, to the space station over the weekend, but you can't send a payment on a Sunday. It's been said. And so really what we're looking to do is make sure that, that we can leverage both the technology, but also, the digital asset itself as needed. And certainly, however the end beneficiary wants to receive that, and you have to build that into the overall operation, bank accounts, mobile wallets, even cash. And certainly, we have to contemplate that as we establish that. But really, that kind of key pain point is what we've been tackling, and recognizing that each jurisdiction is going to kind of move at its own pace. Compliance and certainty around the regulatory environment is key. Not everyone is going to move together, but what's interesting, I started at Ripple 3 years ago after coming, from banks, large banks, and crypto is kind of a frightening kind of word you didn't say a lot about. And 3 years later, it's on everyone's radar, and it's no longer a if, but how the technology and the capabilities are going to be leveraged.
Yeah. So look, if I'm a CEO for a remittance company, I think there are 2 key things that there's a lot of challenges, but the 2 key challenges that I'm facing, one is my liquidity, right? I have to pre-fund all my transactions. And so I can really see that, and information and value have always moved separately in the payments world, and here's an opportunity to sort of get the value to move in tandem with information. So the liquidity side makes a lot of sense. The other one is sort of de-risking, but both of these then tie into the next point I want to explore, which is, and Elizabeth, you just sort of touched on it with Nigeria, but is the regulatory environment. We're trying to mix an activity that is highly regulated, the payments world, with an activity that is largely unregulated, depending on the jurisdiction that you're in. And, we've got various examples. You've got, Nigeria, as you said, we've got Turkey that came out and said you can't use it for payments. We've got India on and off with banning crypto. I know, Pat, you're having your own challenges with the SEC. What is the panel's view on the regulatory state? And isn't this industry really crying out for, I guess, a balanced regulatory regime that actually helps us all, give it the credibility and the framework that it needs to move forward? Because until then, as a CEO of a payments company, I'm always going to be reluctant, as are my banks, right? They think MSB activity is toxic anyway, and now you put crypto into it, and boy, you're really the untouchable, right? So, Elizabeth, what are your thoughts on that?
When we entered the market in 2015 in Nigeria, I sat down with the central bank and they were like, what spaceship did you come off of, And we really were promoting transparency, the ability to reconcile faster. But again, it's the same story, and it's not a prejudice to the African continent. I'm American, and I'm ashamed of what's been happening in our political sphere. Really, it's just the old game, who's in power? Do they want to give it up? And do they have to? So, of course, we can all sit here and whine and complain that, it's not the way that it looks like, and they're not making room for us. But this is a monopoly industry, and it has been for a very long time. And is there enough push to change that? And, if it's a monopoly industry, then the regulators and the monopolistic companies work together, the end of the story, right? So, we can complain all we want, but has there been a significant pressure on those top companies to stop the things that they do, which is, and I will say in Nigeria, exactly what happened in December, where certain companies went in and made side deals and certain companies were left out. And, for once I was just an onlooker and not in the middle of it, like we were in Kenya of 8 years ago. We were, on the front page of the newspaper about it. And I think, what we can say is there are some data points that suggest change. And one I like to mention is Wave. Sendwave, and they were bought by World Remit. And this is, you mentioned, Anca, what the people want. The people wanted this direct to mobile product. It was a very simple product. It worked exactly the same. I use it every month myself. To send money to friends and family in Kenya. And it works exactly the same way that it did 7 years ago. And it's debit card to mobile money, the end. Nice and simple. They figured out a way to get the licensing in the US to make that work. They hooked it up with a debit card, which is nice and easy. 2 clicks and you're done. It is the simplest, most effective product. And the people chose it as what they wanted. And they wanted the mobile money and they wanted the cash pickup, which they offer in some markets. And that the business and the volumes this company has seen are wild. And World Remit bought them for $500 million, which is one of the largest exits for a fintech on the African continent. And that just shows you that you don't necessarily need, something complicated or fancy. You just need something that works and that's simple and that's direct. And in that situation. Now, in other markets, we can maybe see mobile money being replaced by digital currencies. And I do agree that's going to happen. But the regulators are very reluctant even to let Wave, this product that everybody wants, lowers the cost, so great for the consumer. And even they're fighting with regulators and have been for years. They had issues in Ethiopia, they've had issues in Nigeria and Ghana and Senegal. And so the question isn't really, is it a better product? The question isn't, does the consumer want it? The question is there enough pressure on the incumbents to either die or move over? And I don't know what the answer is. I'm hoping yes.
And just before I move on, Elizabeth, in 3 years space, have they stopped asking you which spaceship, or is that still the reaction you're getting?
Well, at this point, I'm an old lady. I'm an old lady. I can sit back and do Zooms from my living room while 25 other startups go visit the CBN and deal with that. So I'm not the only one anymore, which is great. There are dozens of companies in the space putting pressure. And when the CBN banned crypto transactions in January, there was a whole, diplomatic mission from Planet Crypto that kept going. And I was like, phew, somebody take over for a bit, and I think that's exciting. However, has the regulation been lifted? No. So, I mean, let's see. More people are joining the battle. JP Morgan and Goldman and Fidelity and all these blue shining stars are jumping in the game. Institutional money is coming in a very big way. This has been a very long bull market. So, all of those things are data signs that things could tip. But how much pressure is needed to relinquish something that's been in control for 50 years?
Yeah, no, that's a fair point. Anca, what's your experience?
I think mine is a bit more nuanced there. I admit that I'll put on the hat of the former, employee of the World Bank, who's been dealing with central banks and understands what they're afraid of and how risk averse they are when they see something that they see as a potential to either pose risk to the country's ability to implement monetary policy or financial stability, or scams, right? That ultimately they have to justify what's going on. And I do think, I've been in the crypto space for 3 years now, and with the World Bank before, the conversation has advanced a lot. But I think, and this is something that's valid around the world, there is still an incredible amount of education that needs to be done for the regulators to fully understand how the industry works, the different business models, what's centralized, what's decentralized, how to sort of navigate those issues. And we see this happening right now, right? We see both in the US, we see it in Europe, in Singapore, there's a lot of movement around regulation. A lot of it has been done in close consultation with the industry. Now, how much of the industry input ends up in the final form, that's to be seen. But it's really important, and one thing that I found useful is understanding where the regulator is coming from and explaining how some of the obstacles that they may be seeing could be alleviated through a proper and principled regulation of the space, right? you're looking at countries that have really taken a hit in terms of remittances during COVID. And you talk to them about how, people who may be able to receive payments in crypto could bring hard currency into the country. And so I think there's just a lot of nuance around one or another country's reaction to the industry. A lot of education to be done. But I think, honestly, and I was talking at the Vodacom Public Policy Series just the other week, no country wants to be the Kenya that said no to mobile money. And so they're all, they're trying to figure out how to advance in a way that doesn't put them at a major risk. And this is, I think, the one thing that I keep reminding regulators, which is the exact same questions that we're hearing today around, digital currencies, around fraud, AML, and a number of others, we heard 10 years ago around mobile money. And so being able to have that perspective is, I think, really important.
Great. Pat, if I could ask you, Ripple is having, continuous conversations with regulators, but also your perspective as you talk to financial institutions around the world. How are you seeing that? And has that changed over the years at all?
Yeah, I'd say Ripple's kind of mentality has always really been to work from within, because while it may have been completely decentralized with the concept of Bitcoin, in order to make sure you can do the onboarding and offboarding that Elizabeth talked about, you have to work within the framework. I think what and you mentioned the SEC. Obviously, I'm not going to talk too much about an ongoing investigation, but the reason why it's important to Ripple for that very matter is we think we're right by a matter of fact and law, and we're pushing because we believe in the innovation that comes, with the industry around clarity. And right now, that clarity does not exist. Fortunately, there are some, there are some countries, Japan, Singapore, Switzerland, the UK, and others. They're taking a kind of a leadership position in this space and providing frameworks. And what that allows for is the innovation that actually advantages, those end either consumers or businesses that can take advantage of, the capabilities. And so I think we've always tried to educate, regulatory and compliance, colleagues across the globe. We have a strong function within Ripple that does just that, to advocate on behalf of both the industry, but really on behalf of the end value that we think can be availed through this. And I think if you kind of look at how it's being embraced differently, I think kind of a recent poll came out that 70 to 80% of the countries are looking at the CBDCs. So the technology is certainly under consideration. I think the clarity, especially the U.S. where I'm sitting today, which helps so much in things like the internet that I talked about earlier, and that the capabilities, the proliferation of that industry. I think it's critical because it allows for investment, and that investment then helps kind of those end users.
Yeah, and I think the good thing is that there's a debate happening, right? If you go back a couple of years ago, it was just this whole stigma attached to crypto and so on. And even in Nigeria, Elizabeth, as you talked, their own sort of parliamentarians came out with a view that was quite contrary to what the central bank had. And so at least we're starting to see both sides of the argument come out, and hopefully it's the start of something that will progress to. I think a balanced regulatory framework would be good for the industry and give everybody clarity on, how do we operate on it. I want to run a quick poll it's not directly related to cryptos, but as we have an audience from the remittance companies, I want to take a pulse on what is the impact of the flows experienced by the providers, particularly COVID. Veronica, if you could run the poll that talks about the impact of the flows experienced by, or maybe I can do it from here. Oh, that's not the one I want. That's why I leave it to you, Veronica. If you could run the transaction poll.
It is there, Mohit. It is there.
Yeah, you want to just run that poll?
It is. People are responding. You can see.
Oh, okay. You'll have to. I can't see the answer, so you'll have to tell me when you.
People are still responding. You have started using in over 6 months. Let me close it, and you will see it. Can you see it?
I can see it. Yeah, that wasn't the one I wanted to run, but that's fine. We'll run the other one later, so that's fine. We can go with this for now. Okay, we can give it a minute, and then we'll close it. Okay, we can close that. So that's interesting. We have 28% of the people saying they're never going to use it, which is interesting. So, Pat, we're going to give you all their contact names, and hopefully you can dissuade them otherwise. But come on to this later on. I wanted to sort of combine two things, if I may. Look, we spend an eternity in the payments world trying to make things seamless and get interoperability in terms of the various rails that exist and so on. We touched on mobile money. I mean, that's also been one of the challenges. And then you started to get a lot of companies like yourself, Elizabeth, or MFS and so on that started to connect this whole world, and we started to get interoperability. I mean, now we've got, obviously XRP, we've got a bunch of stable coins. We've got these CBDCs that are coming up. I mean, is there really a need to have these many rails to basically send money? And aren't we just making the problem worse in terms of how do we then achieve interoperability between these various blockchain protocols? Because if you're on the Ripple net, Pat, you're on the Ripple net, right? And if you're on Celo, you're on Celo, or if it's Lumens, then so on, blockchain and Ethereum and so on. Okay, there may be some crossover, but it's very restrictive. I mean, maybe I'll start with you, Pat. I mean, what's your view on that whole interoperability question?
Actually, I think interoperability is the key. And, maybe one thing I'd correct you on is we do not think that there's going to be one winner. We think that there are going to be many winners, and our parallel I'll keep pointing back to is the internet, and we don't know what who the winners are going to be, nor do we know what kind of innovations sit on top of it. So RippleNet is actually built to be able to transfer any kind of assets, as I mentioned earlier, fiat, cryptocurrency, things like NTFs, which are taking off. We do not know, and as a result, I think when we talk about interoperabilities, there's the standards and the ability to, move information across those standards. We're fortunate to have built RippleNet on the ISO 20022 standards, which has become kind of de facto within payments. So that's important, but also too is kind of open access. So in order to, have interoperability without open access to whatever the end mechanism by which the beneficiary wants to receive that value exchange, it becomes difficult to do. So, we look at things like the ISO working groups and certainly kind of watch with open eyes on PSD2 and things of that nature, because we really think that's kind of ability to have standards and open access enable interoperability.
Okay. Anca, what's your views on that?
Yeah, I agree with Pat. I don't think there's sort of one network that, takes over all of it. I think there's just a lot to be done. in terms of improving how the financial sector works today. There's a number of differences between different networks that position them better for different use cases. And so I think it's good to have choice, to be able to understand what fits your own product and needs better. I would also imagine that, as you know, it's very unlikely, quite frankly, that some of the central banks will develop their own blockchain to build CBDCs. They will build on public or private versions of what exists today, and so those are not going to exist in a vacuum. CBDCs also need to interact with the rest of the world. They need to be exchanged. They need to be able to travel. And that's where interoperability becomes really important. Stello has the ability to build bridges to a number of other blockchain platforms, and different teams in the ecosystem have done so, whether it's to Bitcoin, to Ethereum, and recently launched a protocol named Optics, which provides very easy, cheap, and fast bridge to a number of other layer ones. And so this is really very important and front of conversation for a lot of the folks in the industry, right? Ultimately, it's not the goal to build parallel systems, but rather provide interoperability both into the traditional finance, right, into mobile money, into banks, but between some of the networks. Is there a need? Again, I would argue yes, because different things are built for different use cases. And so being able to choose what suits you best, I think it's really important. A lot of people will care about privacy, and then they would go to private networks. Other people care about different things. So I think choice is important. Like Elizabeth said, the end user should be the one choosing what most matters to them, and how the services should be provided to them.
Okay, and Elizabeth, your view, but also, is it game over with CBDCs coming out? I mean, what's the need for having? I'm sorry for the other panelists, but I'm just going to be. I mean, what's the need to have all the other coins if you can just use CBDCs basically once they're there globally?
Yeah, well, okay. First of all, CBDC is a derivative of the U.S. dollar, and I believe that hegemony of the U.S. dollar is not great for the African continent and a lot of other frontier markets for a lot of reasons. But right now, it works really well. And I hate to be very basic about it, but it's like shampoo. If it works, you buy it again. And so we've had the opportunity to buy a lot of coins, and we tried offering many of them, and everybody in the industry has reached out saying, "Hey, Elizabeth, why don't you offer this into Ghana? Why don't you offer this?" Nobody bought it. I'm being completely honest here. So, I mean, the only thing people wanted was USDC, and they wanted it a lot. And immediately, some of our customers moved right over to it. It was easier for them to digest. And these are companies that were already using Bitcoin or Ethereum. So for them, it was like no brainer. Now, let me tell you why I think they did that. It was already offered at the same exchanges where they had registered and fulfilled compliance. And let's be honest, 54% of the people listening to me go on about this right now are remittance service providers. It takes months to open up accounts and get things through compliance. So let's be very basic about this. Once you have a counterparty relationship, you use what they offer. It's the easiest and it's trusted. So to then say, you know what, we're going to have this one exchange here like Bitstamp or wherever where we get these three things and then do a unique integration with an entire layer that takes a year. Yeah, very unlikely, I believe. Ever in the history of the future, who knows? Anything can happen. But right now, in the 8 years I've been doing this, I haven't seen the willingness for that. Now, remember, the decision makers are the 50 biggest remittance companies in the world and their treasury departments. The end user should be in their mind, but if they can't pass compliance, it's going to be a bit of a mix on that. And in terms of the end user, I hear you on research, a lot of it hypothetically asking a user, what would you like? But in actuality, on the ground, if there's no liquidity, then how do they pay their rents? And yes, in some super high inflationary markets, maybe that makes sense. but Ghana had the highest performing currency in the last year. It's not a hyperinflation market, and in a lot of African countries and the places where I work, and a lot of frontier markets are not hyperinflation. So I mean, we have to be, let's split the world, not just, you know, north of the equator and then hyperinflation. There are a couple of markets where there's hyperinflation and a lot of places where we don't have that. And the user still thinks, you know, I need to pay my rent in this amount of money. Now, we saw USDC in the last year, and listen, I wasn't an early adopter. I gave Jeremy Lear a hard time about it, but people want it and they use it and it makes sense. So I will say that. And I think, again, we still have the same dollar issues that are there, you know, with, you know, who's going to win in going forward? Will it be China or will it be America? Will we have to close onboarding and offboarding on Martin Luther King Day and, you know, Memorial Day and American holidays where the dollar lives and nobody in Africa cares about that? You know, we still close business on a lot of Mondays because of that, you know, onboarding and offboarding into dollar denominated. And so there's some practical short-term situations that happen. And, you know, the dollar hegemony, who your counterparty already is, and do they offer this coin? Do we need a unique integration for this? Will it pass compliance? And then there are the mid to longer terms. Is this good for the universe? Is this good for planet Earth? Should we design a better financial system? You know, I passionately believe in that, but in the next 3 to 5 to 7 to 10 years, when will that happen? I don't think in the next 2 to 3 years.
Interesting. You mentioned about all those holidays. I remember running the remittance companies, and that was just a huge drain to my liquidity because I had to keep funding for the US holidays and the Filipino holidays and so on. Right? It was a nightmare.
Well, I will say we have a pre-funding product now, and we do that exactly. It's for the long weekends, it's for Ramadan, it's for Easter holiday. How do you do pre-funding post-settlement for 3, 4, 5? And what's really exciting is how do we then do, you know, a 10-day forward, which sounds very simple, but in a lot of frontier markets, you can't price out forwards, or they're not, you know. So that's something innovation that we get there. And we don't see that yet. We still have a lot of spot market. And I wouldn't say the forwards and futures and swaps for these digital currencies are that, you know, easy to digest and as liquid and fairly priced for a lot of these companies to accept. But that is some place where there's a huge gap in the market and there's a lot of innovation available.
Right. And I think if we just look at that last poll we ran, I mean, 29% of the people are sort of saying they're never going to use it. 40% say they'll start using it in over 6 months. I mean, if we look at if we just take the benefits in terms of the liquidity that we've just touched on from a business perspective, I mean, I know we've touched on the regulatory constraints. And when I talk to people, you know, their first reaction is, yeah, but it's so volatile, right? How am I going to settle? But volatility is really not an issue when you're looking at liquidity and you can back in and out. I mean, Pat, maybe you can what needs to happen to really drive adoption? I mean, put the customer aside for now, let's just say, because we've touched on, yes, there is a need, but the ecosystem needs to develop and so on, and it works. But even from a liquidity, which is a huge impediment to growth for a remittance company, what can we do to really get people to understand that this can help? What needs to change?
Well, just to keep pounding the clarity drum, I mean, I think the biggest hurdle right now is on the regulatory front. That said, you know, we over the last few years, you know, at least for XRP, having, you know, kind of deep market makers and the ability to kind of go in and out has happened, at least on the XRP front. And so I think with that utility and value, you know, comes, you know, the use case. And I think, Mohit, one thing that you mentioned, the 4-day weekends and or sometimes 5-day weekends, or in a pandemic, you know, you don't know what that actually looks like. When you're looking at seconds in a volatile market, it really doesn't mean much when you're talking about days, you know, across, you know, what can be, you know, those situations where you have to have that kind of 5 to 7 day pre-funding. And you know, that's where today, where we're talking about our on-demand liquidity product, you know, you're really talking about not only being able to eliminate the existing pre-funding, but actually also provide, you know, 30, 60 days worth of, you know, credit to fund business. So not only are you improving the balance sheet from what you have in pre-funding, but also providing availability to open new markets. And that's where we've seen, as you said, there's 29% of the audience we'd love to have a chat with just around how valuable that can be, for a treasurer and or a CFO as they're looking at their balance sheet. So we think regulatory clarity, and the proof is in, that that ROI.
Right. Anca or Elizabeth, I don't know if you want to add something to that.
I look, again, I don't know if it's the bias of coming from the industry, but I'll have to agree with Pat on this one. Yeah, I think that it's, even if we leave aside end users, which I would have to say that, again, cLabs has been running projects in markets that are emerging, and not all of them high inflation, and they're still interested in getting stable coins back to either the US dollar or the euro. So our experience has been a little different from what Elizabeth has been describing. But even leaving that aside, is a lot of the internal settlement and liquidity management of remittances is something that I think can benefit widely from using. I would argue stable coins because it takes away the volatility of it. I'd also agree with Pat that if you're looking at transactions that are settled in seconds, then volatility, again, is less of a risk than if you're looking at days. And it takes away a lot of is it a weekend? Is it not a weekend? Who cares? The blockchain is open 24/7. It doesn't exactly close down for business, and nor does it charge you, tremendous fees to go through a number of banks to reach its destination. So.
And Elizabeth, you touched on that you have this product that you're offering in terms of liquidity. I wonder what reaction you're getting. But also, when you started out in Kenya, yes, in theory it works, but if the off-ramp is not there, if the liquidity is not there, it's great when you're doing 1,000 transactions, but it ain't going to work at 1,000,000 transactions, right? So then you're just compounding the problem. So is that a challenge still that we face?
1,000,000,000%. I remember we launched, and since we were integrated with M-Pesa, it was instant. Right? So instant onboarding. And then I had all these, very well-funded white men run companies that were getting licensed in the UK and Europe. And they're like, oh, we're putting all this money at licensing and on-ramp with these big crypto exchanges. And I was like, great. How do I off-ramp? Tick, 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 2013, 14, 15, 16. Still today, there's no good way to get out of sterling without, quite a bunch of slippage. So it was kind of like, where is that there? And that was actually the reason the company developed the way we did. We then went to the UK. We got the license ourselves with a team of 3 in 2015 with very little funding. And we became a licensed payment institution in the UK. And we just decided to just put off our own P&L. And, when we built our business, that's what we've done. We found buyers and sellers and made that book happen. And, when a lot of the order books launched in frontier markets, it's one directional, or after about 1 or 2 coins, all of a sudden the liquidity drops way off. And you have some coin issuers that pump in the liquidity themselves, but it's like a subsidized system, and that's not really sustainable. So, liquidity is so important. It's important in fiat currencies. It's important in digital currencies. It's a basics of monetary and fiscal functioning, and we seem to forget it all the time when we're launching these cool new innovations and products. But if you don't have a buyer and a seller, the price is going to be really distorted. And so what we do is we really try to match different customer segments. So on one side we have the remittance companies, and on the other side we have corporates and internationals, and we put them together. And then we do cross-border in Africa, and we do Africa, rest of world. And by this triangulation and all the different things that we have up, we're pooling and settling, and we're building liquidity. And honestly, the African continent could hold another 10 AZAs. And so could we be replicated in South America and Southeast Asia 10, 20x times. And it shouldn't just be us. There should be more counterparties in the market. And the way for these coins to work is that there's a lot of counterparties. And we've talked to a lot of them and they say, can you be our counterparty? Can you? But what's the incentive? How does that get there? How do you get everybody to kind of join forces? So I think, I've been in crypto a long time and I'm excited about what could happen, but I think we see winners are winning quickly. And you see people want to join this one. Okay, it's a winner. There's not a lot of slow burners that really have true market dominance. A couple, but not really. And I think it tells you right then, what's the ease of use? What's the popularity? Where are they available? Does it really make a difference? Is it something that people get behind? Just like any other product anywhere in the world. And she with the most liquidity wins. So if you manage to make that book and if you manage to be able to every day tell your client, yes, you can buy and sell. Yes, I have a good price. I'll settle it quickly, etc. Then, you're going to be a popular company. And I think we just haven't seen a lot of that. And, when the MTOs come to us every single day and say, what do you have for us today? What do you have for us today? It's a daily thing. And back to the shampoo analogy, if it doesn't work, you change brands. And, beauty users are famously fickle because if the price isn't right and the liquidity is not there, 1, 2, 3 days, you've lost the client. So I think figuring out how to build liquidity is an essential tenet of this industry. And I think anybody who doesn't have that right from the start, it's hard to win clients.
Yeah, couldn't agree more. Great. I think let's run the poll, Veronica, that I was trying to run, which was I just want to take a pulse on what is the impact that providers are experiencing in terms of volume. Last year, because of COVID, we had this regular sort of pulse take. And so it'd be great to get, I know not directly related to cryptos, but would love to sort of see what you guys are experiencing in the market. Okay, just give. Nobody's seeing a decrease. That's very encouraging. Okay, excellent. I think we can. There's a couple that are. Yeah, I think we can stop that, Veronica. Just wanted to get a pulse on that. That's great. Look, I want to sort of maybe focus on one last thing, although we could carry this on for hours, but I know we're running out of time. There is so much changing in the payments world, just the sort of traditional payments world, right? Whether you look at open banking, you look at sort of the SWIFT GPI, after all these years, just the enhancement to the traditional rails, the CBDCs that we talked about. I guess if each one of you could just look into your crystal ball, it'd be great to just get your sort of closing comments in terms of, what do you think of the landscape changing, let's say in the next sort of 9 to 12 months, and particularly anything you want to emphasize in terms of where you think those digital assets may fit into it. So we'll go alphabetical again, I guess, where we started. Anca, maybe you can kick us off.
Sure, happy to. I think especially in crypto it's really, really hard to make predictions because something will come out of left field and will sort of influence the entire market. I think COVID was one of those instances. I think we'll see a lot of growth, a lot of more institutional adoption. A lot of the big players in fintech and payments already getting into crypto and trying to understand how to best use them. My sense is not even the top of the iceberg in terms of what's going on has been publicly announced yet. And so we'll see a lot more of that. And I think we're going to start seeing definitely the ECB will come out with their roadmap for the digital euro. They're still playing coy, and whether that will or will not happen, I think it will happen. And the question is how and what features and what's the timeline. And that will really push things. At the same time, if we were saying there's a lot of regulatory momentum right now going on in the US, going on in the EU, UK, Singapore, the Emirates as well. And so we will have a lot more clarity in the next 12 months. Now, how that will impact the market, it really depends on where the regulation lands, and that's looking good in some jurisdictions, looking questionable in others. So we'll see.
Okay, Elizabeth, your thoughts?
I would speak to those listening in that take another look at these options. I think if you're looking for real-time settlement, if you're looking for liquidity and pricing, sometimes it does make sense to use a digital currency. And I would, ask yourself not to close yourself off to that. And I do think that the industry is going to a place where we are seeing contenders from the big incumbents. And while all of them are not going to be digital currency related, and I think there's a lot of noise and fluff and vapor going on in there, there are some very savvy young companies coming out and getting traction very quickly. And they're all mobile and digital, and they're not SIM card based. So, that's a very important tenet in a lot of frontier markets. Yes, we have mobile money, but it's SIM dominated. So, unless the telcos are going to suddenly surprise us and innovate radically, they will go out of business, I think, even faster than, the banks. So I think, the next 2 to 3 years, we're going to see things moving from SIM-based mobile wallets to web-based, and especially as internet penetration is growing so rapidly. And in that situation, we're going to see mobile wallets win. Web-based mobile wallets win. So there's going to be a lot of neobanks and digital offerings, and whether some of them are digital currency savvy, I think so. But I think the first step is moving away from the SIM-based systems.
Great. Pat, you can have the last word as the ladies have had the opening words.
Well, hard to follow those acts all day. Look, I think a couple of years ago when I started in the crypto space, it was a $200 billion market cap industry. It's eclipsed $2 trillion now. So you're looking at a kind of a force, and I think that is going to continue over the next cycle to attract entrepreneurs that are going to come in and figure out how to leverage the innovation and the technology around it. And I'm excited to see what it'll do in terms of hitting, some of the things we talked about today. I think where we talk about compliance, we can really hit the mark on making it better. Financial inclusion, make it better. Identity management, liquidity, all those things that, there are true problems out there. And, agree with the ladies on making sure it's real. And I think one of the balancing acts that we're going to see coming out of it is, there's this privacy element as well that will also need to be kind of looked at. The good news is I think we'll have that counterbalance, and at the end of the day, I think we're going to continue to see an explosion in interest. And like I said, as long as it's built from kind of within and built with those end users in mind, it's going to be a fun ride. Great.
We're going to do one last fun poll, and then I'm going to bring it to a close. Veronica, if you could launch this one, please. What is the price of Bitcoin prediction by the end of 2021? It's always, I like you, Elizabeth, I'm a huge Bitcoin fan, so no guesses for which option I'm going for, but
I love that this is always a question. We talk about the nuance, the regulation, the practicality, but that's like...
Who cares at the end of it, right?
Elizabeth, I want to know your answer. Which one were you?
I'm over 100, yeah. I think we're going to hit just about. I don't think a lot over 100. I think just on the tip. I think everybody wants it. So I think, we always see the November, December run up, even in a bear year. So I think the will is there. And let's be honest, there's still a lot of market manipulation. The liquidity is low. So if the people want it, they can make it happen. I'm not saying for how long, but.
That statement was never true when you look at the price of Dogecoin at the moment, right? Wait till Elon gets on Saturday Night Live. But anyway, that's a whole new topic.
My 9-year-old house.
Well, he or she's going to be very rich, Elizabeth. So. Well, look, as I said, this is a topic that I really enjoy, and we could talk for hours. But thank you so much to our panelists for their time and contribution. Thank you to the audience for attending. Please do send us your comments and feedback. We'd love to hear from you. And I guess until the next time, everybody, please stay safe. Thank you. Thank you, everybody, for joining today.
Thanks, Mohit. Thanks, Anca. Thanks, Pat.
Thank you.
Thank you, everyone.